Hello everyone, my name is Lachlann. I write for Monday Morning and I'm also an analyst on Exponential Stock Investor. Now today I think I've got an exciting update, or at least a very informative update for you. I'll be giving you the inside scoop on one of our Exponential Stock Investor themes. So this is a theme in our stable of stocks which we are seeking to extract exponential gains from. Now not all of our picks are successful, but this is a long-term perspective that we're taking on the market. So I'm going to start with an article from the AFR today. It's by Robert Guy. So that's the Australian Financial Review. And I think this is a very well-written article because what it does is it explains how the US dollar could weaken in the next year. So right here you say, it says Goldman Sachs and Citigroup are calling that the US dollar will weaken into 2021. It's not the most, I guess, outrageous call, but Citi, for example, says that they think the greenback will fall around 20% in 2021. Now, what I'm going to do next is, after looking at this article, I'm going to look at the charts for the US dollar and the AUD, the Aussie dollar. Then I'm going to discuss the XJR, which is the ASX 200 Resources Index. And then I'll look at the charts for three metals. So it is going to be a bit of a whirlwind tour, but I hope you stick with me because it's a very interesting situation that's unfolding, particularly in the world of currency and the way that feeds through to resources. So here you have the article. He says, basically, the RBA is trying to put a cap on the value of the Aussie dollar to basically underpin our effort to literally dig our way out of the pandemic recession. So by that, he means they're trying to prop up our exports by basically keeping the Aussie dollar low by expanding their balance sheet. So the US Fed actually has a balance sheet of 9.8 trillion, which is a whole lot more than the RBA's 300 billion plus balance sheet. So the RBA is engaged in quantitative easing, and that is part of the balance sheet, the bond buybacks, etc., which I covered recently. So, I mean, the headline is that the vaccine is kryptonite for the US dollar. So I guess what he's saying is that if the US dollar remains weak and an inflationary scenario plays out, you will have some very interesting things going on in the Aussie dollar, and the RBA might not be able to keep the Aussie dollar low in an inflationary scenario, especially in the US. So I guess what this means is, let's have a look at what's happening with the dollar index, DXY. So this is the DXY chart. I've covered this many times before, but it's a very important part of the financial system. So the dollar index is a basket of currencies heavily weighted towards the euro, about 50% weighting towards the euro. And as you can see on the chart here, big spike in March as everyone flees to the US dollar in a time of crisis. And then it's been sliding aggressively, and it's starting to, I guess, trend down right here. It's just a small downtrend that's formed here. But I guess if the US dollar remains weak, then the Aussie dollar may actually go up in value over a period of time, especially if they can't keep up with the Fed's bond buyback programs. So the RBA has a bond buyback program in place, and it's designed to, I guess, put a cap on the Aussie dollar. But what we're experiencing now is sort of a global race to the bottom. Everyone's trying to devalue their currency to prop up their manufacturing sectors, and they're also resource exports. So this is the Aussie dollar chart I've got here. So you can see it's sort of operating in a bit of a band right now. There's this long-term downtrend, but it'll be interesting to see if it can punch through resistance at, say, about 74 cents. And that will play into, I guess, the ability to export resources. Now, you may be thinking this is a bad situation for our miners. So I'll just dive into what's happening with our miners at the moment. So this is XJR. So this is the resources index on the ASX. And you can actually see what the components of the XJR are on, and this is from the AFR's website. So you've got Whitehaven Coal, Viva Energy Group, Beach Energy. Then you've got a mix of sort of gold miners. So you've got ST Barbara, you've got Regis Resources, Silver Lake Resources. So I guess when you take all of that into account, you've got this mix of sort of failing energy companies in the XJR. You've got, you know, successful gold miners, and then you've also got BlueScope Steel in there, and then that's about it. What the composition is. So the XJR has been doing quite well recently, but I think that's masking where some of the most exciting stocks may be. So I'll just take you to this chart, which is from longtermtrends.net. So this is the stocks to commodities ratio, and this is what one of our main themes in Exponential Stock Investor is. So what you see here are these channels of deflation and inflation alternating over periods of time. And the stocks to commodities ratio is one of the key driving sort of factors behind our supersell thesis. Now, you can learn all about that in the link in the video description, but what I want to do is continue on this theme. So what you see here are these channels, and basically the stocks to commodities ratio is at an all-time high, meaning that the S&P 500 relative to the commodity market index, PPI, which is the producer price index. So that is basically telling you that commodities have not been this cheap for a long time, and stocks are relatively expensive. Now, what would happen if this deflationary channel suddenly turned into an inflationary channel? So that's these sort of beige channels here. Now, in each of these channels, you can see that the stocks to commodities ratio dips. So imagine if we had a reversal here with an inflationary scenario playing out. Well, there's a lot of history backing this up, saying that commodities in times of high inflation scenarios have been used as hedges. Now, history may not repeat, but we have a good guide here. So on that note, I'll just take you through some of the charts for 3 different metals. Now, here you can see from Business Insider, you can see that the iron ore price has spiked hard from May. Now, this would be playing into the share price of, say, Fortescue Metals Group, BHP, Rio Tinto, as most of their operations are centered around iron ore. So that's, and then it subsequently slid a bit here. But long term, I'm actually kind of bearish on iron ore. And that's because I think, well, there's so many factors that go into iron ore, but the Chinese construction industry may slow due to, I guess, a slowdown in lending. Now, that hasn't really materialized yet, as far as I'm aware, but it's something to keep your eyes peeled for. And of course, iron ore is closely tied to the demand for steel, and that includes white goods like washing machines, dishwashers, et cetera, et cetera. So there is a number of risks out there for the iron ore price at this current price. That's just my view. But what I do want to draw your attention to is something I've drawn your attention to before, which is the 6-month copper spot price. So that right there is a pretty bullish chart. And that's from May through to mid-November. So that is sort of a steady rise, and it's the same situation. Sorry, this is from Kitco, I must add. And Kitco's also got the 6-month nickel spot price. So again, we see this very bullish chart. And I guess what I'm trying to say is that a lot of the companies you see in the XJR, they're not particularly focused or at all focused on these 2 resources. So I guess what I'm trying to say is if this inflationary scenario plays out and if commodities are used as a hedge, then you could see some very big moves for companies that are associated with nickel and copper, and a variety of other smaller mining companies. Now, small mining companies are very risky, but if you can identify the right resource and the right project, there is a lot to like about this sector. And on that note, I would just draw your attention to the Supercell report, which you can download via a subscription, and you should definitely check out that link in the video description for a more full explanation of what we're seeing with commodities, currencies, and I guess the potential use of commodities as a hedge in an inflationary scenario. So by all means, check that out, and also check out the article which I've written for Monday Morning, which dives into this topic a bit more. And you can find that in the video description below. So I hope you have a safe week. I hope you've enjoyed this little dive into commodities, currencies, and that sort of thing. So by all means, have a safe week, and I'll speak to you soon. Thank you.